Good afternoon and happy Thursday, everyone. It is Scott Bowlers with River Place Capital. It is Thursday, March the 17th, and happy St. Patrick's Day to everyone out there. I hope everyone is having a wonderful St. Patrick's Day. But wanted to take some time, talk about where markets ended the week last week and what we've really seen in a wonderful rally of a week that we've had so far this week, and talk about what's caused that and a little bit about market functions and how we tend to overshoot both on the up and down side. So last week was another down week in the S&P 500. The S&P 500 finished the week down 2.6%, making it negative 11.8% for the year as of last Friday. Now the mid cap index was a little bit better, down 150 for the week, and the small caps, as measured by the S&P 600, were the best performer, only down 1% for the week. Again, as we talked a little bit about last week, why the small and mid cap indexes are performing a little bit better than the large index is because they don't have as much international exposure out there, and so they aren't being sold off as significantly hard as these larger firms that have more international exposure, especially exposure to Europe as the conflict in Ukraine and Russia rages on. So one of the things that I really wanted to touch on is kind of the functionality of markets too, and how we tend to overshoot markets both on the up and the downside. And what have we seen here recently is what we believe is we're seeing the overreaction on the downside. So we believe that we finished the year last year probably a little bit too high or too overbought, and more on the exuberant side. So we overshot on the upside. Now the correction that we've had this year has been too much on the downside, we feel, and that we feel like we hit that precipice this week. And we've seen the market really rally off of some good news. And the good news is the Federal Reserve came out and they raised interest rates 25 basis points, or 1/4%. They didn't raise 50 basis points, which was everyone's fear. However, they did come out and signal that they plan to raise interest rates at 6 more meetings, or 6 more times this year. So that is something that markets are having to digest and moving forward. And so far, the markets have said, hey, these names, especially in the NASDAQ, that was in bear market territory down 20%, these are just so oversold now. We have clarity from the Fed. We have some resolutions here, and we know where we're moving forward from here. And it allowed some buying to come in. We have had a lot of money sitting on the sidelines just waiting for that right opportunity to come in. And we truly believe we saw that happen this week, as you've seen significant rallies in the S&P 500, the Dow Jones, and especially the NASDAQ. The Dow is now positive for the month of March, and we've had just weeks of downward pressure in the markets. So we're looking for buying opportunities. So what does this mean for you as an investor as we overshoot both to the ups and downsides? Well, number one, that says we have to hang in there through volatility, both on the up and the downside. But when you see markets starting to head down, those create wonderful buying opportunities. An opportunity, we like to say at River Place, is buying the market on sale. Meaning I just handed you the S&P 500 that's down on sale 11.8% as of last week. We know markets will always come back, so you know you're going to make that return and then some on top of it as the market recovers. It may not be the bottom, you don't know that, and no one is ever really knowing when to call the bottom, but if you know you can buy something cheaper than what it will go back to, why not buy it when it's cheaper? So now, if you have questions about that or how that works and how we're navigating through this market, please feel free to reach out and give us a call. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful St. Patrick's Day, everyone. Thanks.